Hi guys, my name is Yadiri and this is Crypto For You. Today I'm going to talk to you guys about what's going on the Bitcoin chart. I'm going to give you a little update. So look at this. We just broke out of this, well, not just like a week ago, but we broke out of this huge rising wedge. And we're right now dumping. We broke out of this, how it's called, bear flag, like a day ago. And we right now we just keep dumping and dumping and dumping. And a lot of you might be thinking that the bear market's over. This is crazy. But in reality, I don't think the bear market's over, and I'm going to explain you guys why. But look, the target of this bear flag is at $43,800, $44,000. That is a really important level to think about, guys. Remember that number in your brain for the rest of the video. Now, I think we could be going to the target of this rising wedge, and I don't think that the bull market's over. I'm going to be explaining you guys why I don't think the bull market's over, even though a lot of people are talking about how the bull market is over and we're going to dump. But I don't think it's over. I'm going to be explaining you guys all that and more in this video, so let's get into it. So look at this. First thing I want to talk about is that we broke out of this rising wedge, and this rising wedge is a bearish pattern. 70% chance to the downside, 30% chance to the upside. I predicted that we would break out of it, and we did. The target of this triangle is 42,900, but this has nothing to do with how we dump 30% chance to the downside, 30% chance to the upside. Nothing to do with that. This is just something separate by the history of what it does. This is we were always found out that we usually dump from 100% to 70% of the way down. So let's just get, even though like this Fibonacci retracement has nothing to do with it, you can see that this is half of the dump, this is 0.618 of the dump, this is 0.78 of the dump, so this is about 0.7 or 70%, anybody who knows math. So about somewhere right here, which is about 49,000, but we're way clear of it at 47,400. That's where we dumped so far. So technically, we already hit the target of this falling wedge, but of course, we could go all the way down to $43,000. Now, what is that target of $44,000 like that I talked about, and why is it so important? Well, look at this. The weekly moving average, the 20-week moving average, is actually at $43,900, $44,000. And of course, this is amazing. This is a really gigantic moving average. Like, as long as we're above it, we're in a bull market. Like, look at this. This is the $20,000 gigantic bull run, and you can see it, we kept tapping it. As soon as we broke it, of course, we went above it a little tiny bit, but technically we got rejected because we went above and we didn't even confirm. We just broke it again. And then we have this bear market. As soon as we go above it, we are in a bull market. When we break it, we're on a bear market. So right now we are above it. And I think if we break this level, that's right now at $44,000, you will be in a bear market. But I think we're going to tap it. 44,000 is well within the range of this rising wedge. It's right here. It's a little tiny bit higher than this 43,000 target. And by the way, if we go like to $45,000, that's still going to be fine because of something else that I'm going to do right now. I'm going to tell you guys that this has something to do with the Bitcoin stock to flow. Now look at this. The dump that we could take from all the way to the top to where we went right now is 27,000, not 47, 27. I almost said 47 there. But a 30% dump would be at 45,400. And the 20-week moving average usually goes like $1,000 up every week, but it usually slows down when we dump. But that would be well within range of the 45,000. Now, why am I talking about this 30% level so much, guys? You probably are asking. Probably not, but why am I talking about this 30% level? Well, actually, all the time when we dump in these corrections, because of course in this bull market we're not only going up, we always have these 30 to 40% corrections. You can see where I'm going at now. Now, these 30% to 40% corrections are usually like pretty big corrections, and everybody thinks that Bitcoin's gonna dump. Of course, some people say that 25% corrections are still good, and I think that's fine because on the $20,000 level, we once dumped like 27%, I think, and I think that's fine. But right here, you can see that we already had a 31% correction. And then right here, I think this is the one. Yes, we had a 26% correction. So technically, we already had 2 corrections, not counting some of these tiny ones, because we had a lot of tiny ones, like right here, of 17%. And then there was like this one. But you get it. There's like a lot of tiny ones, like right here. But we look like we could dump to like 30 to 40% corrections. We could dump to there. And that would mean the stock to flow model is still working, guys. And by the way, look at this. We used to be really high. We were so high above this blue line. This blue line is the stock to flow line of the 463, day moving average of the stock to flow. This is the 10-day moving average, but this is the 463 moving average. So we're way above it, and now we're just a little tiny bit above it right now. We're like $2,000 above it. It's right now 48,000. I was predicting that we could dump because of this, and we are right now doing that. Usually we go either below or to that line when we dump, and I believe that we could go below this line. Now, this is why I do not think the bear market is starting. The bull market's over. Everybody's panicking. I'm not panicking. I'm just sitting and watching, waiting till we actually stop, if we are gonna, because of course there is this warning if you break the moving average on the weekly time frame. But this target is $103,000, and usually we go much higher than it. Like, look at this. This is the $20,000 level, and the stock to flow model was predicting we would go to $5,000. We went to $5,000. We went much higher than that, to $20,000. It's 4 times as much as the target. Now look at this. This is a target predicting that we would go to $158, and we went to $1,000. That's like a 10x. Like, we went 10 times the amount. Now this is a $2 target, and we went all the way to $20. That's another 10x target. So we go much higher than that. We can go like 2x maybe here, since we always slow down by the looks of it. But that's of course just my speculation. But I think we will go much higher, like 150,000, 160,000, somewhere there. So I don't think this bull market is done, guys. I think we're going to keep going up because of this. Now, we could start going up right now, because look at this on the daily time frame. Of course, we just did this target, like I said already in this video a lot of times, but I just want to say it again. 70 to 100% is the target. Somewhere we already did. That's where we already did. We already did it. We went like 75% of the way down, and of course this could be the bottom. And we're already tapping the 100-day moving average, and also the stochastic RSI and the RSI are really low, so we could start pumping right now. But we have to think of a few things: an ABC correction wave and a dead cat bounce. Now, a dead cat bounce is usually something like an ABC correction wave, so let's just talk about the ABC correction wave, which is the most common. Usually that happens after an Elliott wave, or like some kind of gigantic pump, probably an Elliott wave. And usually, by the way, the dump, the ABC correction wave, happens to this golden pocket. We tapped the top of the golden pocket. So technically, this could already be the end of this already dump, and we could start pumping right now. And I can explain you guys how to know if this is the end or if this is an ABC correction wave, and we're going to start doing the B. Now, let's just say we start pumping and we start going up. Now, usually in an A wave, we go up to do the B wave from like this 0.5 level to the 0.618. And this box right here is my calculations where we could go. This is between where we're going to go. This is the golden pocket. If we start pumping, this is where you're supposed to watch. If we start dumping right here, which is, let me just say, 56,000 to 58,000, because a lot of you guys are probably listening to this while you guys are driving or something. Talking to you, Dad. And after this, we could dump down and go much lower, like to 43,000. So let's just say we dump after we tap 58,000. This could be the C wave that's going to happen later. But if we break 58,000, we start going up, 100% bullish, we're probably going to go up. And 65,000 is the target of the all-time high, a higher high. If we do a higher high, amazing. I think we're going to be 100% bullish. We're going to keep pumping, do this. Of course, we could just break this 100-day moving average and fall down to the $43,000 level, 44,000. But of course, if we break this weekly target, we could be seeing a bear market. But of course, we have this, like I say, the last option, inflatable life preserver that turns on when you're about to run out of breath. Even though that's not really a thing, this 100-day moving average is technically that thing. It's like the lifesaver. It's at 34,000 if we come for support and go up. But of course, this is me just talking because we might just start pumping right now. But if we break that level at the weekly time frame, we could be saved by this 200-day moving average. My bad. The 200-day moving average might get saved by that. But right now, this is what could happen. We could tap support on this 49,600 level, the 100-day moving average, and go up. We could do this B wave. We could tap from 56,200 to 58,500 and then dump. That's going to be the A, B, C correction wave. The B wave, that's the resistance line. After that, we dump. If we break that level to the upside, bullish, we're going to go up. But if we get rejected, we're probably going to start dumping. And the dump would probably come down to about 45,000 because while we're going up, of course, time flies. It doesn't just stay in one position. You can see that the week would probably go by. We might go all the way up to $45,000, but that's going to be fine because we're still going to be inside the target, and we're going to have like a 31% dump, which is going to be well within this range of that dump. So, of course, we could go like 25% dump. We already went 27% down, so this could be counted as already a good dump. We could be going up. And of course, there's multiple dumps that happen in a bull market. So if we break this level and go up, no need to worry that we're not in the gigantic bull market or this wasn't a completed dump. We could still dump. I think if we keep bumping and we actually break this $58,000 and go up, it's fine. We're going to be really bullish. I would make a long, actually, guys. So, this is what Bitcoin's going to do. Thank you, guys, for watching. Go down below this video, guys. Please leave a like. Go, guys. Hit that like once or 3 times. No need to do it 2 times because it just turns it off. 3 times. On, off, on. Or, if you haven't already, subscribe and turn on that post notification bell so you actually never miss another video. Why wouldn't you not want that? Daily, I do a lot of updates. Why would you miss the video, guys? But go do those things. Like, subscribe, bell button, and by the way, share this video to one of your friends. Some of your friends that trade, maybe they don't trade, maybe they want to trade. Guys, share that. So, with that being said, I'll see you guys next video. Bye!